Yes, good morning, ma. Welcome to Alpha Online Education's Commerce theory part for the English medium second years, and the chapter we are dealing with, that is the financial services, and this is the second part. First part we have seen the introduction, and in the second part we are going to know about the functions of the bank. Before that, we have to know one thing, that in October 1994, okay, in October 1994, Oriental Bank of Commerce, okay, Oriental Bank of Commerce, this was the first bank which got the permission to enter into the capital market. This was the first bank in the India, okay, it was the first bank which is nationalized to enter into the capital market. This was the first bank, okay. Which bank? That is the bank, Oriental Bank of Commerce. Now let us see the functions of the banking sector. What are the functions? So banking sector functions are mainly classified into primary functions and secondary functions. Again, the primary functions are classified into accepting deposits, advance loans, okay. The primary functions are classified into accepting deposits, advancing loans. So let us see what is what in detail. See, fixed deposits. Fixed deposits means those deposits which are fixed, okay, which are fixed. Deposit means what? Amount. The amount is fixed for a particular period of time. That particular period is known as maturity period. Maturity period or maturity date, okay. That fixed period is known as maturity date or maturity period. Up to that, on these fixed deposit, maybe it may be 2 years, or it may be 3 years, or it may be 10 years, whatever it may be, it will be completely depend upon the fixed time, the fixed duration, fixed period, it is completely depend upon. So it may be 2 years, 3 years, 10 years, or even 25 years also. So that is based on the deposit agreement. So it is fixed for a period of time, and for that fixed period of time, the person who is doing the fixed deposit, that is FD. Fixed deposit is also known as FD. So on that FD, there will get regular interest, fixed interest, okay. Whatever the interest is fixed on the day, that interest there will get monthly there will get that amount only. For example, the interest rate is something 5% on that particular date, okay. They deposited 1 lakh rupees. Now there will get 500 rupees regularly every month up to that fixed period. It may be 10 years or it may be 2 years, whatever it may be. That is fixed deposit. Then current deposits. Current deposits are not fixed, means they don't have the maturity period. They are deposited, but there can be withdraw at any time. Here we can't withdraw the amount. We have to wait for that particular period. But in the current deposits, we can withdraw the deposit amount at any time, at any point of time. There is no fixed maturity period. It provides some interest, but that interest is not equal to the interest of fixed deposit. That is current deposits. Current deposits are not fixed. They don't have any maturity period. There can be withdraw at any point of time. Next, saving deposits. Saving deposits means there are also a type of deposits, okay. Saving deposits also type of deposits which get interest, which get certain amount of interest, okay. Regularly there will get a certain amount of interest. Regularly there will get the certain amount of interest. Those deposits are saving deposits. Current deposits, the interest rate will be very less, okay. But on the saving deposits, the interest rate is fixed. It will be similar. to the fixed deposit, somewhat similar, completely not, somewhat similar to saving deposit is similar to fixed deposit, but it also don't have any maturity period. Next, recurring deposits. This is a completely different type of deposit. What it is? Recurring regular income to the deposit a fixed amount every month. Just in post office, they will first only fix a certain amount. For example, 1 lakh rupees they have to deposit. 1 lakh వాళ్ళు deposit చేయాలి. So every month they will regularly deposit 5,000, 5,000, 5,000. Like this they will deposit for nearly 20 months. 20 months they will deposit 5,000, 5,000, 5,000. And finally they will get these 1 lakh rupees. On these 1 lakh rupees, the interest rate will be equal to the fixed deposit interest rate. Okay, this is recurring deposits. These type of deposits are generally taken place in post offices. Okay, these type of deposits are generally we can observe in post office. Every month you have to deposit certain amount. The first, the huge amount you decide first only. Later you will start paying regular income to deposit a fixed amount. Every month you will pay some fixed amount to make that amount. Okay, to make that 1 lakh rupees, every month you have to pay 5,000, 5,000, 5,000 till 1 lakh rupees the amount will be. And it has the interest rate that is equal to the fixed deposit interest rate. Next, advancing the loans. Okay, we will explain, we will go to explanation in detail in the next session. But here we will see what is what. Overdraft facility, OD facility. Okay, cash credit, advancing loans. This is another primary function of the bank. Okay, overdraft, cash credit, discounting the bill of exchange. Okay, money at call, term loans, consumer credit, creation of credit, promote the use of the checks, remittancy of fund. Promote the use of the checks means it encourage the customers to use the check. It provide the checkbook. Okay, it will provide the checkbook. So remittancy of funds, these are the some of the primary functions of the banks. Not only one bank or two banks, it is the primary function of each and every bank's primary function, that is advancing the loans. Yes, now let us see about the secondary functions of the banking sector. So what are the secondary functions? Agency functions. It work as an agency. Okay, agency means it will provide some type of services to the customers. Okay, next, utility functions. Utility, certain type of utility functions also it will be provided. So agency functions, what are those means? Collection and payment of credit instrument. Okay, collection and payment of credit instruments. Purchase and sale of securities. Yes, we know that bank will purchase and sell securities on behalf of their client. Collection of dividend on shares. Okay, in the bank also there are some share stock market transactions will be going on. So bank what will do? It will collect the dividend on the equity shares or preference shares, whatever it may be. Act as a correspondent, provide up-to-date information. Income tax consultancy. The amount which you are deposited in the bank, on that amount also the bank will charge a certain income tax. Okay, TDS form అనేది submit చేస్తారు, tax deduction form అని. Okay, execution of standing orders, standard orders, whatever the standard orders are issued, those orders are implemented. Act as a trustee and executor. It will act as a trustee. Everyone can trust the bank. Yes. Next, utility functions. Yes, utility means so we get the satisfaction. What kind of locker facility? If you have any documents, if you have gold, jewelry, whatever it may be, you can keep in this locker. Okay, you have to pay rent, interest also. The bank charge certain rate of interest on the bank locker also. Okay. Travelers check and credit card. Travelers, when they want to travel from one place to another place, at the time it will provide the check facility, credit card facility. Okay. Letter of credit, this is during the international exports imports at the time. Collection of statistics, how many deposits in the last year and how many deposits are done in the present year. Comparison, statistics, okay. Next, acting referee means it acts as a referee. It will provide every information, okay. Underwriting securities means underwriter. You know what is underwriter? He will buy the securities. If no one is ready to purchase those securities, he only purchase those securities. Yes, bank also act like that only. Gift checks, it will provide some checks as gift to the customers. Accepting the bills exchange on behalf of the customers means bill discounting. These all things are accepting by the bank on behalf of the customer. So these are the few important functions of the banks. Let us now, we have already discussed about the accepting deposits. Now in the next session, we are going to discuss in detail about the advancing the loans. We have generally 9 loans, advancing loans facilities. What are those? We will discuss in detail. Okay. So in the next session, we will meet with the new concept, that is advancing the loans.